Hello guys, my name is Gavin Panu. This is your M Trading weekly webinar. So in today's webinar we're going to be covering trade ideas. So the main focus of today's webinar will be how do you form trading ideas, how do you place a stop loss, where do you place your targets, and also we'll touch on risk management. Yep. So what we're trying to do is put the previous 3 webinars all together now. So the previous webinar was on timeframes. So we want to go into timeframes first. Then the prior webinar to that was about candlesticks, which we're going to cover. Looking at the main candlesticks we're going to be focusing on is not the line bar, but actual candlesticks. Yep. So the ones that you can see on the screen now, the blue and the red. So blue will be seen as bullish, the red is seen as bearish. And then our first webinar, which is on price action and understanding that better, we're going to also complement our trading ideas with price action. Okay, so the way to start, so what you would generally do is, okay, come to your assets. So choose an asset, and ideally you may focus on an asset based on what you've heard in the news, any fundamentals that you have done research on, and then you'll bring up that chart. And one thing I'll say about the chart, it is a leading indicator. Yep. So from your fundamentals you would have an opinion, but you would that opinion needs to be confirmed by price action, by what you're seeing on the chart. Now, if your fundamentals are telling you, okay, that this asset over here should be trending higher, it should be bullish, when you go onto the chart, you should be seeing a bullish uptrend. If you're not seeing a bullish uptrend, then there we go. There's something not right there. Yep. So then I would look into, okay, the technicals are my leading indicator, and they're not showing me a bullish sign yet. Either I wait for a bullish move, or I go back to my fundamentals and see if I've missed something, or am I too late? Am I the last one to sort of look to be buying this asset? Yep. So you don't want to be the last one to buy. The aim is to buy low and sell high. Yep. So you need to do your fundamentals first. We will be doing another webinar on fundamentals. Okay. So let's go through it. So what I'll start off with, I'll go with gold. Yep. So I've got 3 assets at the bottom here. We're going to look into gold, we're going to look at S&P 500, and we're going to look at euro dollar. So that way we're covering one commodity, one indice, and one forex pair. Yep. And then multi-time frame, let's go with more of a swing position. So we're going to look at more swing time frames, which will be, say, the daily, 4-hour, and the 1-hour time frame. The first time frame will be the daily, so that is our major time frame. That is our major time frame. And there we go. So go to the daily time frame. I may zoom out a little bit. So zoom out a little bit just to give me an idea of what's happened previously. Yep. So I'll be looking at what's happened previously to this. And that will give me more of an indication of whether we're bullish or bearish. Yep. And at this point, the first thing I'll be looking for is what is price action doing? So this comes back to our first webinar. What is price action doing? Are we continuing to make higher highs and higher lows? Or are we making lower lows, lower highs? Or are we making equal highs and equal lows? If we're making equal highs, equal lows, that generally means we're in a range, we're in a consolidation zone. But if we're making new highs, that's bullish. New lows, that's bearish. Yep. So you can see currently price action. So remember, you want to look at peaks and troughs. So we're looking at peaks and troughs here. So we can see generally prior to these previous highs, these previous peaks are generally in the same price range. Yep. So that will be seen as more of a range. We're in a most recent range. So we'll always start off with support and resistance. So I'll place a support and resistance level. This is my resistance level. Yep. So I've seen a resistance here, and I'll potentially put in another support at this level. Remember, resistance at the top, support is at the bottom. Okay, anything else do I need to note down? I'm not too sure yet. Just looking at price action, okay, this was the low. So you can see that, okay, at the 1126 handle being the low, we've seen a bullish run getting up to a peak of 1298. So we've got a peak to 1298, 1295 level. And since then, we've tested that level the second time and almost tested it the third time at this point here. Yep, so that's the bulk of my view here. So I'm trying to read a story, guys. That's what you should be aiming to do. Try and read price action story. Maybe I potentially could place, well, no, the way I'm viewing it now, this is perfect. This is all I'm going to do in the major time frame. Remember, the major time frame is just to define your key levels and look at the overall trend direction. Right, so let's move on to the next time frame, which is the 4 hour. Yep. So remember now we've done our major time frame analysis. Now we're on the base time frame. The base time frame is where we're going to do our detailed analysis. We're going to do detailed analysis at this point here. So what I'm looking for is, okay, what are we seeing here? We can see previously from this previous high, lower low, lower high, lower low, lower high, all the way through. So that is seen as a downtrend. So I may place a downtrend line such as that. Let's just get into the high. So there we go. See a downtrend, and there is a potential pattern formation over here you can see, which is inverse head and shoulders, which will be another webinar, guys. I don't want to bring up patterns into this, but yet price action can lead to sort of consolidation patterns that give you an early indication of a potential reversal or continuation. But that's for another webinar. But so far, what we're seeing at the moment is a significant downtrend. We broke through that downtrend. A good break through that downtrend. Yep. And remember, you want your trend line and to your support resistance is 3 touches. We have 1, 2, got our third touch close enough there. Yep. We broke through to the top side. Now we have an uptrend. Now this uptrend could be placed from this low to the next low. So if you want to include that most recent low, you could see something similar to this. Yeah. So you could be viewing this as your uptrend line. This could be excluded. So this could be excluded purely fundamental and news-related impulsive sell-off, sort of like a false breakout. Yep, sort of false breakouts. And that is your detailed analysis, guys. It's just looking at the shorter term as in where are we currently. So what I'm seeing at the moment is that we've come back to our trend line over here, come back to this trend line. There could be another bullish move. Yep. And trying to keep your perspective open, guys. Don't focus on one type of trade. The idea is try to have multiple trade ideas. So we could look for a long position and a short position. I'm open to both. Yep, so don't be too narrow focused or tunnel visioned into just one perspective. Try to keep your trade ideas open. So if we do break through, if we see some rejection on the top side, we break through this trend line, I would want a bit more confirmation. So a bit more confirmation of a break lower. Yep. So as we're defining sort of high highs and high lows, so let's just do that now. So if I'm looking at my down arrow, so that would be, so this area here is, that's higher high. Let's just place another arrow down. So that's my first higher high. Then we're going to a higher low. So all the way up to this. That's quite a strong drive. That's another higher high. And this is also seen as another higher high. Higher lows. Remember to define your higher lows. We start off at this point here. Start off at this point here. We have another impulsive move from this point. And again, we're seeing potentially another significant move over here, and potentially another up arrow here. Yep. So if you are still within the trend, exclude this false breakout. Yep. We're still within the trend. The idea is you need to be bullish. This is a buyer's territory now. So we're assuming this is more buyer's territory. So if you're looking at probabilities, I would say that there's a higher probability that we go on to make a new high or an equal high. There's a lower probability that we go on to break this trend line and make a new low. So that's the way to view it. Okay. So I'll have an idea over here. Maybe I may look at a secondary indicator such as the Fibonacci. Look at from this low up to this high. Let me just adjust this color. It is okay, awesome. So as you can see over here, I've taken a fib from this low up to this high. So from 0, so this is 100% of a move. So 100% of a move, and I'm seeing that, okay, we've seen a sell-off back to the 61.8. We're seeing a sell-off back to 61.8, and we've bounced off this level. That's given me another confirmation that this is seen as a significant level of buying pressure. Yep. So this is your buying zone in this area here. So yes, we are looking for a buy side position. Now, what do I do? This is where you go to the next part of your analysis. Yep. So we've done our base time frame analysis. Now I've formed my trade idea. This is where I formed my trade idea. I now know that I'm looking to buy. My first trade idea view is to look to buy. Yep. I'm looking to buy in this range here. So in this range here is where I'm looking to buy. Yep. Let's just get rid of this so you already know that I'm looking to buy in this zone there. Yep. We know that the fib was up to this key point here, so let me just redraw that again. Okay, so my potential target is back up to previous highs first. So my target is back up to this range here. Yep. Why here? So why have I set my target here? Why have I set my target here, guys? Okay, so the main reason for setting my target here is, the idea is I'm looking for the least path of resistance. I'm looking to take a trade up to an area where there is no selling pressure, where there is a very little chance of some sellers coming into the market to push the market further down. Yeah, so we've seen that there's been sellers here previously at this high. We've seen sellers at this resistance level also. So I'm just going to stay within that zone. So that will be my target. Yep. I'm not sure what's going on with the audio at the moment. Okay, let's continue. Here we go. So let's continue from where we left off. So target has to be realistic. Realistic is the key word. Yep. So I want to be within my levels. I want to be within my levels, within the resistance, within the previous high. This is the area where I see that there is unlikely to be any resistance. Yep. For now, my stop loss placement, now that I've defined there's buying pressure here, there is buying pressure here, this being that low now, this is the area where I'm looking to place my stop. Yep. I may decide to add a buffer. I may decide to add a buffer to this, but this will be the area where I'm looking to place my potential stop loss. Yep. And the stop loss should be in a worst case scenario. The aim is to place your stop loss in the worst case scenario. Especially, it's also important to define that area, and then if it continues, if it does go into hit the stop loss, you can actually reverse the position. You can actually switch your position and go short. That is the aim of the stop loss. Your stop loss should not be, and the number one mistake that I've seen while I've been coaching other like-minded traders is stop loss. Stop loss has been the number one issue. Yep. Okay, so stop loss placed at this key level here, below the previous swing low, away from the trend line. Yep, so that's the key point here. So now that I've defined, okay, this is my base time frame.
The broadcast is now starting. All attendees are in listen-only mode.
Okay, so I'm not sure what happened there, but I'm pretty sure everyone can hear me now. Is that correct? Okay, yep, so let's do a recap then, guys. Let's do a recap. Yep, so I'll start off on the major time frame. Yep, so I've started off on the major time frame, guys. I'm going to run through this as quickly as I can because I know that some of you guys have been able to watch my screen only and not hear me. So let's go through it again. So you've seen already my analysis on the screen. Right, so what we're seeing over here is on my major time frame, I'm looking to do just the overall analysis. So what's the overall trend direction? What are those key levels? So I've seen that, okay, there is no significant trend being formed purely because equal high, another equal high, a lower low, but again, that prior low was lower. Yep. So we're within a range. Yep. So this within this range over here. So I have a resistance level and then I have my support level. Once I've done that analysis, that's my major time frame analysis done. Yep. Then I move down to a 4-hour time frame. I go down to a 4-hour time frame where I do my base analysis, where I do my detailed analysis. And this is also where I form my trade idea. Okay, so I first start off at the prior trend. I want to see what the prior trend was up to. I want to see what the prior trend did. How long did it go on for? How do we have a breakout to start this current trend? Because we can see naturally the price action is moving from this high down to this low, from this low up to this high. So that is two different trends. So we have this downtrend with 3 touches to the top side. 3 touches to the top side. We broke through at this key level here. So we broke through this key level over here. And I've also at the same time placed high highs and high lows. So this being the low, high high, high low, high high, higher low, and that is the higher high, and I'm assuming this is the next higher low. Yep, the idea is you want to trade with that trend. Yep, the momentum is with the buyers. We are in a buyer's territory. We've seen that the buyers come back at this level, and now they've come back at this level. Same time, place my trend line within to give me a guide of how this trend has formed. Yep, so we can see this is my trend line. At the same time, another fib level. So I placed a fib from this low up to this high to see where we retraced to. And you can see the retracements back to the 61.8% level. And the 61.8 level is a golden ratio. It's a golden ratio within Fibonacci. Again, this is something that we will introduce in webinars going forward. Yep. But let's go into this now. So, yep. So my first idea is to go long. I'm looking for a potential target level at this key point here. So my target being up at this point here. The reason being here, not to say at this resistance level, is I'm looking to be realistic with my target. I need to be realistic with my target. I want to be within this zone. This is where I've seen sellers come in previously, as you can see there. Again, before within this previous high, we've seen sellers come in at this point also. So I'm looking for that least path of resistance. Yep, the path of least resistance in a way. Yep. Okay, so stop loss placement. My stop loss will be placed below the previous swing low. So the stop loss will be placed below the swing low, and that is at this key point over here. Yep. So this being my stop loss placement. Remember, your stop loss placement should be within, away from a level. So the keyword is away. So targets, the keyword is within. For stop loss, keyword is away. So I want to be away from this trend line, away from this previous swing low, and that is, and also to add to that, your stop loss should be in the worst case scenario. The whole idea of a stop loss is to get you out if the trend goes against you. Yep, and then if that's what takes place, that the trend goes against you and it breaks through this level, well, actually, that's a trend breakout then. That's also identifying a potential short position. Yep. Okay. So that's my major and my base time frame done. Now go down to a minor time frame. So the minor time frame is about triggering and executing that trade by using candlesticks and timing it with getting correct timing. Yep. So on the 1 hour time frame, look at the 1 hour time frame. How do I want to execute this trade now? So viewing this, how do I want to execute this trade? So my view might be is, okay, what I want to do is go into potentially place a counter trend line. So let's look at a counter trend line. So I may potentially place a counter trend line such as this. So something like this. It's now, what I want to do is extend this level. Let me just go into options, go to parameters, let's remove that ray. There we go. Okay, so that is my counter trend line now. Yep. So I could look for a potential break through this level. So a break through this level, which will also indicate a break through the 38.2% level on the Fibonacci. Yep. And that being a major Fibonacci level. Yep. So if we break through this level, so break through this counter trend line, through the Fibonacci, that could be my indication of a potential long. So the area to execute my trade is in this zone here. That is what I'm looking for. As an area to execute this trade is at this key point here, the potential target there, and the stop loss placed here. Now, that gives me now my trigger. I know what I'm looking for in execution. My execution is a impulsive candlestick, so impulsive candlesticks that breaches through these levels. Yep. The next part of this is risk management. So how much are you looking to risk per trade? Yep. So ideally, you want to be risking a certain percentage with all your trades. Yep. And try to be reasonable with that percentage. Remember, this is still about probabilities. You're not going to have 100% hit rate. So you want to be able to live and fight another day, as they say. Yep. So you don't want to be taking large trades at a high percentage and then blow your account and then you're unable to trade next week or next month or whatever it might be. Yep. So the idea is the industry standard rule is 2% is your daily risk, 1% is your per trade risk. Yep. And these are maximums. So ideally, if you're looking to take a trade, your maximum risk per trade should be 1%, which allows you to up to that daily risk, which is 2%, to have 2 trades. But if you're looking at now placing 4 trades, then yeah, you have to change your per trade risk. So then you move your per trade risk down to 0.5% up to that 2% cap. Yep, so you adjust it in that way. So yeah, that is what is industry standard. Another key point I would like to make is also risk to reward. Yep. So what am I looking to risk from? I'm looking to enter here, the stop loss to this point. Again, entering from here to a reward of this target level. Ideally, the minimum should be a 1-to-1. So if I'm risking £100, yep, let's just say £100 or $100, I should be achieving a minimum of £100 or $100. Yep. The higher the better. So if you're risking $100 for a potential target of $500, that's even better. Yep. But the minimum should be you risk $100 to achieve $100. Yep. And that is a 1-to-1 risk to reward. Yep. And remember, that is seen as an overlay. So for an example, if I just now adjust this, assuming that market goes on, moves on, and now I'm looking to execute here. Yep. So let's just assume that the market moves from, say, let's just put in a trend line from this to there. The market's here now. The market's at this point over here. I've seen it set up, and I'm like, okay, I still want to take part. I still want to get involved. Yeah. If you assume that, then your risk management is what sort of shuts that down. Yeah. So your risk management rules is what controls whether you take the trade or not. Yeah. It's an overlay to your technical setup. So my technicals are great. Yeah. So there's a high probability trade. I can get to this level. Get up to this high. Stop us over here. Yeah. Why not? Why shouldn't I take this? But if you come down to your risk to reward, you would see that, okay, my reward over here, the upside is that I can achieve, say, $50. The downside is I'm now risking $100 or $150. Yep, so a significantly larger risk to your target. But then you may say, okay, now I would look to, let me just try to get in. So now you may say that, okay, I'm now looking to adjust my target levels, and bring in my targets, say, down to a key level. Yep, so I'm now going to bring in my target or extend my target. Yep, so you may decide to, okay, extend this target even further. I'm going to fit this trade now. I'm going to move my target up to this level. At the same time, I'm going to also bring in my stop loss in further. So I'm going to bring in my stop loss to this key point here. So let's bring in my stop loss over here. I'm going to bring out my target there. That gives me a bit of risk reward. So you've done a fundamental mistake that happens a lot in the markets. And that is you're fitting your trade to what you want it to be. You're now not basing your analysis on technicals and on just analysis that you've done, you're now not basing it on analysis or any due diligence you've done, looking at the fundamentals, technicals. You're now basing it on assuming that, okay, this is a short trade, and now I'm going to go for that target. I want to try and go for the moon, and I want to have the tightest stop loss. Yep. So, as a warning, guys, do not fit your trades. Yep. The whole point of your risk management is it actually allows you to filter out late trades or bad trades. Yep. So if I'm now looking to get in at this point, my stop loss is there, my target is back to these previous highs, I'll be like, yeah, okay, I've missed the trade, too late. Yep. That's, shame on me. Shame on me that I've missed this trade. What I should do now is think about, why did I miss this trade? How can I stop this happening for the next trade? Yep. Do I need to wake up earlier? Do I need to keep an eye out on the assets on a regular basis? Do I need to set a price alert, which will warn me by an email or an SMS to let me know that price is at this key point? So you have to find ways to you need to find solutions for your weaknesses, and especially for your mistakes. And that is how you're going to improve as a trader. Yep. Okay, guys. Hopefully that's made sense. We've covered, so the last 3 webinars were sort of specific topics, and now we've put it all together. We did have a technical issue, so I'm not sure how this recording is going to be. But worst comes to worst, guys, I will repeat the same process with a different asset next week if I need to. Yep. So I can go over the same type of putting the previous 3 webinars together and cover that again. Okay, guys, thank you for listening. This is Gavin at M Trading, your weekly webinar. Please do get in touch and let us know how you feel about the topics we're discussing. If you have any input that you want us to cover, yeah, please do. Okay, take care all. Bye-bye.